Hey, welcome in. This is Michael. In this video, I will go over how to get a new construction loan for residential and commercial property A to Z, walking you through the steps you should know about with commercial and residential and what would be asked for on a loan application. I'll give you some examples, walk you through some scenarios. I've helped out clients get funding in this space and many others. And for full transparency, I want you to know that I work with a lot of real estate investors, those who are in the ground up construction for residential, commercial. You're looking to find land to plot lot on. Is it raw, underdeveloped, developed land? What we need to focus on there. I work with fix and flips, with rental properties, duplexes, triplexes, many stuff on the real estate side, also on the working capital with people who need funding for growth and expansion to build. You want to get out of a tight pinch. You are a complete startup and can't get funding based off of your experience. I know a lot of that comes to play when you look at like multifamily properties and what experience you need to have with single family homes, and ideally a multifamily home already under your belt, or in a horizontal build, or in a different setup where you weren't the specific person who was with all the experience. You had somebody else who had that. You're acting as like the financing partner. So I'll get into that. I'm going to get into the share screen in just a second to show you a document you can go through, and I'll leave you this down below in the description most likely, or there will be another form you can fill out as well. But in my time doing this for many years as a business funding expert, I've seen a lot of different properties and situations here in my community as well as outside of my state. And it varies depending on your county, depending on your state, your community, on what would be asked for, the part of the appraisal process, the survey part that needs to be completed, and then making sure you have the plan set in place, because whether it's a bank or it's a hard money lender, how will they approve and put a stamp and say, yes, because of the appraisal and the appraiser said this was ready to go, this was developed correctly, there wasn't anything getting in the way of this build, then how are they going to approve you? And there's so much that goes into the different units and what you're building, if it's a ground up construction project, and what type of construction it is. And there's so many things. I won't even get into all the technical words. I have them on my mind now. But is it also stuff that is being in a rural area? Isn't it within city limits area? There's so much that I look at with the lender and the team to better understand your scenario. And again, down below, I'll leave more information. But the first thing we really need, whether it's residential or commercial can take a lot more with architectural. It can be in some cases. It just depends on the state and what permits you need to have. It's, again, different from state to state. A first agreement, a second agreement, a third agreement, 1003 real estate application form. That's always necessary for a lot of ground up new construction projects, especially on the commercial side. That's what you'll see a majority of it on. But the lot is the very first thing. And I won't spend time in this video going over too much about how to pick the right land and what the land already looks like. Is there gas lines underneath this you need to be careful of, and what you're building already on an established property with things around for warehousing purposes, for industrial. There's a lot of stuff that we need to look at, because I've declined a lot of files based upon the location within city limits in a rural area. And it has to be something within the community that is also commonly built. So if there is no past history of this kind of project being built upon a similar type of land or within the right type of footage, acreage, and all of this that will be plotted, and what is plotted, what isn't plotted already, it makes it hard to justify building and giving you the construction loan based upon that. You might have the land, but when it comes to the whole surveying part, once you have the land and then getting into giving the plans so they can give you a construction loan, you just don't go into it blindly without a blueprint. And I've seen so many people's plans, so I know this very well. I can't share with you examples from this one because that is sensitive information, and that's like not secret, but that's their information that I don't want to get into. But let me get into my share screen now and go over some of the things that you are going to see. So give me 1 second. I am adding this here to the stage, and I need to find it on my tabs. There it is, the first one. But it says here, updated for 2023. See if you qualify for the ground up new construction your business needs. And it'll be kept up most to date. So it could say up to 2024, 2025, 2026. The list goes on. And so down here, there's a video you can watch. I might leave you this down below in the description. So if you'd like to learn how to do a ground up new construction project for residential, perhaps you're doing commercial, and I'll go over some of the things that will be required. And I work with the best lenders in this space, just so you know that. And you'll see the nation's premier lender for real estate investors that I recommend. And we'll go into a form and what you should submit. And I go into what is the new construction loan for, or loans for builders looking to build for selling or building to rent homes, property. And I'll also go into build to rent. What does that mean? A vertical build and a bridge plus. So stick with me and I'll go over the different types. They are also for builders with shovel-ready lots or tear-down projects, spec houses or model homes, infill tear-down or subdivisions. So there's a lot of flexibility depending on what you plan to build. I know there are things out there like ADU builds. There's a lot of other stuff that can and can't get done depending on how much you will have left over. And a big part of this that you want to keep in mind is how much liquid do you already have? How much cash on hand and in the banks do you have? It isn't always as common. Depends on who the builder is and the contractors and what you have already on your team. But you might not always have all the money in the bank. And because of how you invest your money or where else you have it on hand, at home or somewhere else. But we want to know how much is in the banks. We want to know how much cash on hand you have and liquidity. And how much can you offset within the amount of assets you have? You have to be careful of doing the cash on hand and liquidity part. Assets, having that hard asset already that you can give up or you can take out equity from and you're looking at other stuff. Now that's another component and what you can recover. The other thing too is with a lot of these like new ground up construction projects, especially on the commercial side, you see 6 to 18, 6 to 24 months. They try not to give you past the year because they base it off of even residential stuff, they base it off of how long will it take you to build. And that's what they're basing off your approval on. And then after that, whatever happens on the stabilization, on the 30-year note or whatever happens before you get to that stabilization, depending on if you're on a downturn or an upturn of the market, you got to understand that within your state as well, not just as nationwide, then you might not want to do that. And that'll be much more to endure through. So back to this part here, you see over here, and there's more to uncover, like I said, with the build to rent and bridge plus services. I'll give you a little bit about that here soon. And some eligibility on this, especially on the residential side, is usually my lenders, they want a subprime credit. So 660 minimum FICO is really it. Experian is usually what is looked at. Equifax and TransUnion can be too, but commonly all three are. So having a good credit score is better. It's most recommended than just meeting the minimum of a 660. So if you can be in the 680, 700 plus, 725 right now is best. If you're 751 and above, you're even better in position to get better rates and better stuff brought to you. So no bankruptcy, foreclosure, short sale or deed in lieu in the past 3 years. That is a must. We want to make sure that you are being compliant and doing this correctly with selling property at the time that it needs to be sold. And so it's one thing to get approved for. It's another thing to understand what's your history like with property and making sure that there's enough cash flow within it, but also what you're taking out of it and what is the short and long-term investment of this? What do you plan to do? How do you plan to exit? What do you plan to do if you sell it? There's a lot of stuff. And if you're also building this off of a commercial property on something else of a construction build, let's say that's on a different matter. Like what if something happens where you go bankrupt and the commercial property is attached to this and underneath your name? Is it being on a lease, on an agreement? And there's other stuff. There's a lot of stuff that goes into this. Foreign nations, experienced borrowers are welcome with max 70% LTC and 60% LTC. So there's some flexibility there. Have more than 4 builds in the last 2 to 3 years is normally common, is what you're going to see when you're doing a ground up construction in the residential space a lot of the times, and you want to look at a horizontal build. And with higher tier lenders, that's what they would require is some experience, having more than 4 builds. What kind of construction builds? What kind of fix and flip builds have you done? Single family builds? Is it 4 plus in the last 2-3 years? If you won't qualify, we have done horizontal deals where someone has a sponsor, or in other words, a builder with more experience, and it will require a joint venture and usually a personal guarantee. I've done plenty of these, to be honest, and these are actually a lot more common nowadays than they were in the past. So if you don't qualify as a vertical build, where you are the one and you're the entity, let's say it's a construction business, this is your business, this is your entity. If you do not qualify for many reasons, for the experience, for the build, and I get it, you have to start somewhere. So how am I supposed to have experience when I'm just starting? And so you can do a horizontal build. You can have other property already out there that's been assembled, and there are different restrictions, and different lenders are different. But if you want the top tier and the best at this, and you can't go through a bank, there's other ways to look at this. And so a horizontal deal where someone has a sponsor, you have a sponsor, somebody that can come in, maybe you have a team assembled, you guys get together, you guys communicate, you have Sally or John, whoever will guarantee this with their credit, and they are the entity, part of the business themselves that they're going to go through, and they're going to be then this part of the plan. This is how it'll be assembled, and it looks all good on their part. All right. So with more experience, and it will require a joint venture and usually a personal guarantee on their part at that point. So you can communicate that with your sponsor if they are okay with that on the personal guarantee and they want to work out a joint venture with you. It could be your first project and they have enough confidence in you. And that's what you want from somebody at the end of the day, that they believe in you, that you can do this. Now, if you have more builds underneath your belt and you're looking for an alternative or something much faster of a closing perhaps, or this whole 30 to 60 day on the lot, on the land, that I would usually say take 60 days as much as you can to then figure out the logistics of this, of the planning part of it, and making sure you have enough time for all that when it comes to closing on the construction loan as well, 30 to 60 days or so, and in time, and 30 to 45 days plus out. So that's what I wanted to mention there. The key benefits of working with us, myself, you get an experienced staff, you will get an expert in yours truly who knows how to handle this correctly with careful, calm, composed control. I got you, don't worry. I'm a big introvert. That's one thing you will learn from me, is that I am a huge introvert, which after being in this financing industry for a while, I think a lot of people want that more. And I'm very ethical. I don't talk much. I do more. So I'm doing a lot behind the scenes that you don't know, that I'm working out with the lender, with the team, that I have my stuff together. I'm looking at the documentation that you supply. I'm reviewing it. I'm analyzing it. I'm going over then with the lender, the underwriting department. And I could have been a full-time underwriter in this space. I would have started in the advanced funding space and then moved into this stuff. But because of flexibility in my own business, and I have other businesses too, there's the opportunity cost of doing it on this side. So I just wanted to make sure you know that, for full transparency. I'm a very loyal person. You don't have to worry about with me mixing you up or not doing this ethically. Fast response time, you will get a quicker response time with full transparency and a lot of loyalty by your side. You won't just get surface level information. Certified expertise, and that's what an introvert does, be our words. You get an expert broker and my expert lender and lenders, as well as internal team to help you along the way. So you're not alone and being left with just unanswered questions. I know that feeling. Best documentation handling. At the end of the day, you need someone who knows what docs you'll need, how to gather them, and how to deliver them. I have a very systematic process, and when it makes sense, not always this, but automation when it needs to make sense. But I have my right systems, processes. I'm an entrepreneur. As much as a funding expert as I am, I'm a digital entrepreneur too. I've built out multiple businesses in different industries. And so I've funded them, and I know exactly the funding processes and what the lender and the team are looking for. So how it works in 3 fast and simple steps: you'll work directly with myself. My name is Michael, in case you forgot. And my expert team, best of the best, literally, to step 1, you enter your information. You will fill out your details into my questionnaire form below, which I'll show you how that looks. Step 2, you get your best option and options. Step 3, apply and get funding. So you will then be able to apply if you haven't already, go through the underwriting and then receive your funds. You will then hear back from me, which is step 2 here, on what your best options are and option is, what you can do and what is more required, and you can get started with your application process. And then step 3 is to apply and get the funding. So about us, you can learn more about myself here in at Viral Funding Solutions, and I can connect you with the best lenders out there, and not just in the construction space, but anything else. Excuse me. It's your money. Go ahead. You can learn more about myself. So if you clicked on here, this will bring you to another form. Let me show you how that looks like on this screen. So for the construction build here, you see property address is being asked for. You see property type. If purchase, what is the purchase price and down payment you have available? If refinance, what is the estimated value and what is the amount owed? So if you're thinking 10% with not so much good credit and the experience, and like you're probably looking at closer to 15 to 20% plus, if not 10%, like you had probably initially planned. So understand how much cash flow you have in reserve equity, how much assets, hard assets, how much liquid cash you have on hand in the banks, and understand what is doable and what isn't. And I can also help you with 0% interest business funding. I also do things on the creative credit side and with credit stacking on the business and personal side with a personal loan you could use. I've had a lot of construction builders use a personal loan as a down payment or use it as the complete way to build, and then kind of put some of that into another account to draw from, kind of like a line of credit would, where you're only doing interest only payments or whatever you take out. But it depends on what you're doing. You have another account you're paying, I get to have, but just look at it how you see it and what makes the best fit. And also when you're building out a new construction build with anything like residential, a lot of the times is you're going to get a line of credit for this made for builders. And it provides you with the certainty that you need for this, knowing that you can have the capital accessible, ready for you to use, and you only pay interest on, and how you structure it. And you need more material to finish your builds, or if it's for anything else that you needed to use, ideally for the construction build, that's it. And it gives you more time, and then when you can withdraw from, and however you need to use that. And you get the most flexibility from this. You can use it to multiply your efforts by financing multiple projects. That including, like we're going over here, the new construction build, or it's a current construction building project, for a bridge, for a build to rent project. You have a fix and flip and rental property. So it goes a long ways, not just a new construction build. And then what you want out of this, and why I always look at this, is speed. And the average time from your initial submission to your approval, it's under 10 days. So that's relatively fast. And when you think about what you're getting approved for in a new construction loan, the land, the time between that, 30 to 60 days here of an approval process, it can take longer depending on your city, your county, your state, and what they come back with in an appraisal. And they go, hey, we have some drainage here, we have these parts of the plotted land or the construction loan project, there's just something missing here. Who's the owner of this, and how can it be built on these lots? It's a big land with you building 5, 6, 7 spec homes or whatever it is. And there's so much that I've seen out there, and I've helped fund, and those who couldn't get approved for because of experience and because of other reasons. And so that's pretty quick compared to what you see what you would see out there. And it's very simple for you. Another part that I wanted to draw here is, as a one-time borrower, and that can be underwritten with a simple, like, it's not invasive at all, non-pressured renewal process to extend your credit line duration. So for whatever reason that is to complete, you needed an extension on, we can look back at the file and see, well, what we gave you initially, what was projected to get done with, it didn't get done. Why didn't it? There was another thing you needed to appraise for. There was something else that needed to happen. And another thing you need to understand is, when you have your own appraisal and you're going to my lender or my other one, whichever one it is, that's best in the space, depending on your needs, I'll align you with, don't worry about that, is they might need to ask for an appraisal from what they have, a third-party appraisal, unless yours is best fit already, and there's an addition to that. So there's that part of the process that you just need to be understanding of, and that's common. If you've been around the space for some time and you've gone from one lender to another one, that's what happens. And if you're new to this, you learn something there. This means once you are then approved, you only need to be underwritten the property before funding, and it's not the borrower at that point. So after credit, after initially looking at all these other parts of the equation, then that's would then be the part that's looked at. And with any kind of like new construction for residential and stuff like that, these are made for shovel-ready lots or tear-down projects. It's best that you already have the land associated. If you don't have the land that I can help you with, then there's that part of the equation that I can help you in time. But a lot of the times you see up to 85% LTC. LTC being that big is good for you. The 70% LTV is kind of what I went into a little bit earlier, and it could be loans from like around sometimes even less than 100K if it's doable, like 90K by a 10K difference, depending on your credit and other parts of what you've built and the amount of the project that needs to be done. Okay. But normally what you want is 100,000 to 3 million. And these are 13, 19, 24-month loan terms that you normally see. In the other space with commercial ground up construction projects, however you decide to do a ground up construction there, you'll see like 6 to about 24 months a lot, but 13, 19, 24-month loan term options, and it's non-recourse available, which there's that component. Interest only new construction, if that's it. Loans with like the line of credit, paying only on drawn funds. And like I went into the line of credit earlier, is what you would see. There's also the build to rent, but let me go back into this part of the video. Give me 1 second to come back to frame. And here, let me go over the rest of this before I go into some of the other builds. So property type, you would just input your information here so I know what type of property this is. What are the contingencies? Make sure you put everything like property address, city, state, zip code. I can't tell you how many times people don't address that part. And I have to go find something online. Like there's 3 locations. Here's on this site, here's on that side. Like I don't want to be assuming. And for energy and time, please state everything in the property address. You have multiple, fill it out multiple times for different properties in different locations, not different units underneath one land and more. Property type, what type of property is this that I'm looking at? If purchased, what is the purchase price and down payment that you have available? Again, if refinance, what is the estimated value and what is the amount owed? Closing under entity, LLC or Inc. or personal name. It's not uncommon that you see people closing underneath the personal name, but amount of liquid assets that are available. That's something huge that I need to know about, as well as the lender, how stretched you can be, because I've had to cancel some recently where they can't do this because of the amount of liquid assets that would leave them with nothing at closing. And even if they only had like 5 to 10,000, that's their cash flow that's going to get zipped away into their project. Or if they stored that for a rainy day, that this wouldn't be done. This wouldn't be completed. And by the time, if they needed an extension on a line of credit, like that doesn't make sense. And the line of credit, if you didn't get the most out of that and you needed funding somewhere else, it makes everything too much more complex. And there are many more reasons for it. So you see that amount of liquid assets available. Again, how many investment properties have been owned by you and or the borrowers in the last 36 months? How many new construction homes projects have been completed in the last 2 to 3 years? If you're not the borrowing business entity and have a builder, please specify and how many they've completed. So that's your part to put into that. If answering to having a sponsor above, you need to do a joint venture and sign a personal guarantee. This requirement, more often than not, is often rejected by that builder. So you would have to be more enticing at that point with your plan and understand I'd have as much already done before you come get this new construction loan, whether it's commercial or you have a residential. We're looking at residential a lot here, but make sure you do have that together. And so this would be a horizontal build, not vertical. So it needs to be met. Is a joint venture okay for them? And you can state yes, no, not sure yet. You need to check. Make sure you do that. If you're using a sponsor, what is their liquidity? I need to know what they have on hand. What is your estimated credit score? Is the property generating income? And what is their credit score at? A rate and term expectations, your name, your email, your phone number, mobile preferred, because I can follow up with you in a text easily, not having to call. And I'm not going to be doing like all that energy and time efficiency. You have to understand. And I'm an entrepreneur. And so I understand that energy and time is the most valuable asset. And I can do a lot of stuff with you via email. I've done that with a lot of builders, and they would actually prefer that, to be honest with you. And I'll give you all the details via email. Here's a follow-up. Here's what I expect. Here's what the lender's asking for. Can you submit this, please? And it's very fast, streamlined. You won't have to worry. I'll leave my story down below too if you'd like to learn more about me. So please describe your financial needs here and to be as specific as you can. Is there new land involved, other parties, etc.? You can learn more about us. Here is that. And now I want to share with you another screen. And actually, before I do that, I was going to do it in the beginning. I do want to go over some of the things that you'll commonly see and come across when it comes to the new construction, residential type of space. But I've been doing this for a while, so I know exactly like what they're looking for and when things change. But like we went over, flexible underwriting, you don't have to worry about that. Speed, efficiency, streamlined, unlike banks or other locations where they just take up too much time and there's too much of a buildup where maybe they're over promising and under delivering and it never works. Another thing you can do if you're having trouble is go for a revenue-based advance. So whether it's credit that I can help you with, which I alluded to earlier, or we go into revenue and you can use that for a new construction loan build. I know it's not that vertical build, but you're looking at if you already generate revenue in your business, you're a property management business, or you're just in any kind of general construction business that you can use your revenue of a business to qualify for and use that for a build that's vertical, that's congruent, most preferably, and it's complementary to what you're doing. Like let's say it's a home caregiving facility, or there's multiple homes, you're building an ADU unit next to it, or there's anything else, and we have to look at the complexity of it and the plans behind it, and make sure you're not over leveraged. But making sure you use that. There's other parts that you can use this for a construction loan. Maybe you are in roofing, you're in concrete, you need excavators, you need equipment loans, you need dump trucks, or whatever it is. There's so much stuff that we can work on if it's not directly in a new construction loan for, ideally on that side, commercial at that point. But residential, that's a whole different thing. And there's more complexity to commercial, I would think, because you're looking at different architectural stuff, if necessary, different permits, the real estate application form, the amount of statements and stuff that is required. But over here, what you need to know at the end of the day is just built for builders, and it's interest only, as we went into a little bit earlier about the line of credit part, and no interest on drawn construction funds. So what you decide to use, you use for it. And the term duration, I went over that, which was again 13, 19, 24-month terms. And for a lot of that being on the residential, you'll see in-house construction management is what you're getting. So you're also getting a team with myself and everybody included that knows what they're doing. And it could be based off of, like what I said earlier, on infill projects. You have modular. I have a lot of modular builds. I've done modular builds with people, spec builds, model homes, whatever you're doing and what you plan on having. Model homes, you can think of so much, new homes, people getting into. But with vertical construction, or before I get into even that part, like I said, there's non-recourse available. So I want you to make sure for full transparency on that. So on the three that I mentioned earlier, which are Bridge Plus, vertical construction, and you also have build to rent, starting off with VC or vertical construction, that's the ground up that you're doing on a vertical build and a vertical construction or multiple builds that you have. And that's with the lot purchase. It's already purchased, you're good to go. And if you needed help with that, I can guide you in that aspect of it. There is a specific development capital team behind that to help out with, and that is usually Setanta, and for a lot loan program. And that can cover more details. I'm not going to try to get into it all here, but some of the stuff there is like up to 85% loan to cost, LTC. Non-recourse there is available as well. It's loans for acquisition and development. You have interest that can occur or be paid current amount of payments there. And then they have different target markets that they want to go after. And the land, it must be entitled with no discretionary approvals that are outstanding. So think about liens, think about foreclosures, of things that you've had in the past with your own experience, but we're now translating that over here into the approval of that land and plotted land and undeveloped land. And there's a lot of stuff that has to be accounted for on the utilities, everything else that comes into it. 100% of the lots, they have to be pre-sold to a home builder affiliated, or it being a third party, which is common. The developer on this must have a resume or completed projects, as well as a pipeline of future deals. That's important. We want to know what the future holds within your state, what you plan to build. Is this even doable? Is this what the market will look like if you plan to do this? Guarantor suitable for the completion of it being guaranteed, or the guarantee. So that's part of that I wanted to mention. But on the vertical construction, the lot purchase, as I mentioned, single homes it can be, or developments. For the Bridge Plus, this is a refinance of a recently completed build of yours, whether you plan to stabilize it after a 30-year note or whatever you have going on, even before, right after a year, however much time you were given to complete the build, you're looking to refinance that, or you're looking to refinance a different property while you wait to sell or rent the current property that you've built. So there's a lot going in that, But if you've been around the time of doing this with new construction builds, you'll understand how that all works. I understand it very well. But here's another one. You also have build to rent, and you can build a new property or development and refinance for a DSCR strategy. So based off of this debt service coverage ratio, based upon how the property will cash flow, it can be a little bit more of a risk. That's why that's not always involved with in the beginning. And you have to look at the current market, not only with construction builds, but I see a lot of people who are doing in the rental space who want something longer term, rent to a longer term note. And it's hard because of the market conditions within the states. There's too much bankruptcy within the states, foreclosures, the market doesn't look favorable. There's so much to consider. So a lot of what real estate lenders are doing right now, and I see it very, very well, and I've helped out people with this, is they want like a 1 to 2 year short-term duration so you can have enough of the materials and supplies to work with. And then after that, once you start cash flowing enough, once you start stabilizing this build, can they then transfer that over to a longer term? And there's a lot behind that, making sure you have enough of the equipment, making sure this will actually cash flow largely enough for what they need in that property, the type of property, the square footage. There's a modular, but there's so much that goes into this. I haven't even touched the surface, but there's a lot of stuff here. But if you're looking for like non-owner occupied residential construction, I have the best lenders in the space. One specifically that works very, very well and that does a lot and that I do a lot through. And there's less red tape in underwriting if you want a lender for that. There's in-house servicing, so you're taken care of, knowing this isn't always passed on to a third party, or it isn't passed on to a third party at all, like with a brokerage or something different. And those aren't necessarily wrong. It just depends on what you can and can't qualify for. There could be flexibility there. There's fast due diligence on underwriting and the closing and the team on this and what we're all doing. The fast construction draws thanks to the in-house construction management and the team behind this, that there's different departments to it. So everybody knows what they're doing. And I know everything that's going on. And when you're doing a new construction, then you're looking at what kind of property details do you have? What's the purpose of it? Is it for new construction? Are you using it to build to rent? Is it a bridge? What is it exactly? And for new construction, we're looking at the ground up construction loans for builders, made for builders. Again, not to reiterate, but I will go into this just so you know again, spec homes and models, modulars. What are you doing? Single family, typical lots or single home should be fully entitled and ready to build within 90 days. You have build to rent, build new construction properties to hold as rentals. So that's something that a lot of people want to do right now, is to hold as rentals for the market to then shift. It can be more costly to have a rental than what you would get by selling a property more immediately to get your returns and your return on investment. So I also want to understand that is on that form, if you have a spot so you can put what's your ROI expected, what do you plan to cash flow, what are you cash flowing now, what can you look at in the market, then that will be helpful. The property type is another thing that I look at. The single family, condos, townhouses, 2 to 9 units underneath new construction, or is it built to rent where you still see the same thing where it's single family? Is it condos? Is it townhouses? Or is it 2 to 9 units for all of this? What are the terms? Again, I already spoke on the terms. The 13 and 19-month terms are available for new constructions. If you're building to then rent this is 13 and 19-month construction period followed by, because that normally is what happens as you start to stabilize and after your build is done. So 13 and 19-month construction period is allotted. And then that's followed by usually 10 is what you'll see. But in this industry or in this market, I usually see 5 years is what people end up getting quite a bit of until something stabilizes more, until you have more builds under your belt. There's a lot of stuff in the market, but a 5 in an increment of 10, and then it jumps by 3 to a multiplier of 30-year long-term rental loans. And at that point, what then you decide to do after that 30-year, that's up to you. But origination fee, usually a 1% plus origination. And that's just expected when you also add in like the broker fee, and there's nothing wrong with that. And being reasonable with the origination fee. So many people go, well, I wanted no origination fee. Can I get that waived off? Well, what's your experience? What's your credit like? Can that happen? Perhaps at times, but we have to adjust for other numbers in other locations. And you could get a term sheet for a lot of this stuff. There's stuff out there that I get that I can communicate it then with you, or however it's best presented to you. I'll show it to you. But I have all of that. I'm looking at numbers myself and understanding that better. I'm a math and system guy at the end of the day. So that's that part for the rental loans part. And the origination fee, I went over that. But the build to rent, Normally what you see under that is a standard new construction origination fee, a rental loan origination fee at the time of conversion minus 50 BPS. So it's a little bit different on the rental side, and there's differences there when the origination fee is given at that time of the conversion minus your 50 BPS. And then the loan amounts for any kind of new construction, as I said earlier, sometimes it's underneath 100K depending on the provider by a 10% differentiation or a 10,000 differentiation, I should say. But normally you see with most legit and best lenders, 100K to 3 million is usually the sweet spot to make sure profit, to make sure the cash flow, to make sure that the return on investment on all parties makes sense and it's doable, and what you'll profit at the end of the day, and what return on investment is going to be high enough, and the projected ROI for your state and for your type of build. We have the numbers on a lot of that stuff, so we want to make sure it is within those boundaries. And the same thing for anything on the rental side for its building to rent. You still see the same thing on 100K to 3 million on that part. With your max LTV, I went into 75% on some of that, and then you get 70% LTARV, which is big, up to 70% on that, and then it's normally up to 80%, like I said, LTC on that part. And then the same thing, more or less, with the rental up to 80% LTC and up to 70% LTARV. So that's ARV on that side for the 70%. And I'm not getting into all like what all that is right now and all that for the time of this video, but I can help you with more of that in time and what that does. But a lot of the stuff with land, you see 50% LTV and a commodity, and what's commoditized. A lot of people want land. Can they get it? How is it developed? Is it underdeveloped? There's so much to factor into land, but it is out there as a commodity for people to purchase if you find the right piece of land and what's already built on that land and what needs to be accounted for. So that's also something to be careful of. And that's why it's always a lot of the time at 50% LTV. And even outside of construction builds, like fix and flips, where you're factoring into rehab costs and renovation, that can be less costly as opposed to going to a bank and how they factor that separately. And when you're looking at in terms of ARV after repair value, you get a lot of a better benefit, and it's much more handled and more consistency behind that. So prepayment penalty, no prepayment penalty, or minimum interest for the new construction. And then for the build to rent, there's a minimum interest during the construction period. So it just depends on what you're building in that period for that and what would be accounted for. Allowable costs for this part, I want to mention that hard and soft costs, they are directly related to the build and they can be financed. The costs, they are not part of your actual construction and they cannot be financed for that. So that including interest, loan fees, realtor fees, etc., other agreement fees that you have in LOI, MOU. There's like a lot of other stuff that people bring up to me on the credit side. How that can't work. Like the lender won't see that and won't really put that into huge or any kind of consideration. But hard and soft costs, as I mentioned there, and also on the build to rent side, hard and soft costs that are directly related to the build can be financed. The costs that are not a part of the actual construction cannot be financed again, and that includes the same thing: interest, loan, realtor fees, etc. More that's factored in. For non-recourse for the new construction, that is allowed for experienced clients. So as I said, non-recourse is available. That meaning that is for experienced clients. You have 4+ builds. What have you done? Have you done anything in the horizontal space at that? If you've even done more horizontal builds than vertical, preferably vertical though in this. Add 25 to 50 BPS to the rate. That would be it for non-recourse for allowed experienced clients. If you are in the build to rent space, that's the same as the standard for new construction on a short term, but full recourse is on the long term. And that's normally how it works for all build to rent, and making sure everything is stabilized. That's what the premise of this is at the end of the day. The valuations on new construction, you have feasibility report, and there is a full appraisal on that. So like I said, the land, you have it covered. You have the survey, the surveyor, the part of the equation, then appraisal, the appraiser going through this, surveying, communication, all that is done. Third-party agreements all come together. It looks good. You have the plan to build this, how you're going to build this, how this is going to be plotted. Everything specifically done to the numbers, to the T. Boom, you're ready to go. Let's go to the next step. Is that an approval? If it's an approval, how do we get fast to closing to help you out on all this? So that's the evaluation, feasibility report, and the full appraisal is recommended and required, and that's what I would need to gather from you and review myself with the team. Normal NC process, seasoning and refinance is waived for when you do a build to rent, and that's just common on what you'll see. Some of the new construction financing details that I do want to go over on this, and then I'll kind of go over some other things in a second. But you do want to have a minimum FICO, like I said, of 660. Can you do less than that? Ideally, in any kind of construction space, 600 plus is the ideal. And that goes for like a cash out refinance. If you go under that, like 550, yeah, it hasn't worked. But depending on your location, it's all about location. Like they say, the location, location, location. That's what it is. And your credit has a lot to do with it. So if you're already over leveraged, you already have a business you run on the side where you have tax liens you need to cover, they haven't been disclosed, you're disclosed late payment removal. There's so much bankruptcies, starting from scratch. There's so much more to account for than the opposition. So I want you to know that. And going back to understanding the credit, there's so much that I know because I read credit reports. That's also something that I do in my day-to-day. I read credit reports during the beginning of my day. Then I look at bank statements or vice versa, tax returns. I look at quite a bit. And then you have build to rent being similar to at 660. Bankruptcy, foreclosure, short sale, or deed in lieu, none in the past 3 years, as I mentioned. That goes the same way for build to rent. You're going to see the same thing for all foreign nationals. As an experienced borrower and borrowers, that's welcome with at least a max of 70% LTC and 60% LTC now for foreign nationals. That's different, not 80%, not 75 or 70% there. For build to rent, same thing. Experienced borrowers are welcome with max 70% LTC and 60% LTC. And then the LTC blended loan to cost, the leverage, that's based on the loan amount. And then that we take that and divide it by the cost of the property plus rehab and the specific LTC for property. And it could be 60% at that point. And LTC for construction could be 100%. And so applied in addition to the blended LTC. And I don't want to go into some of the other stuff here, but loan to value, there's leverage behind that, and that's based on the loan amount. And there's some calculations to this, and then the ARV, the appraised after repair value, and what I would have to look at. And some of the things that I need on a new construction build and for the documentation for the line of credit submissions is stuff like borrower and primary guarantor app. I will need a guarantor app. So let me put this over here on a document. See if I can open up one here to show you. So this is a new document that I brought up, and let me put this into full focus for you. And what you would be needing to expect. So usually you'll see this with like residential. Then I'll get into partially on the side for if you're doing like commercial, and somewhat overlaps in some ways. So we have the line of credit submissions and approvals. And this is the part that most people take forever. So I highly love it when somebody knows they can get their documentation submitted sooner. It's okay if you can't. I'm willing to help you still, of course, but don't also drag it out too long, and be a person of your actions. Like your words, do they match your actions? I'm an action taker myself. So if I was you're my broker, or however this is getting done, you don't even have to ask me for this. It's probably already sitting in your email inbox by the morning, or you don't even have to ask that. But what you see here is stuff like borrower, so the first part of this would be the primary and borrower guarantor app. That's common, and I'm not going to go through all how that looks like. Here, let me move this. Or borrowers, but just leave it as borrower. And primary guarantor app for all subsequent guarantors. That's what I'm looking for. And here is another one. So you will want a line term sheet quote. So I understand what is all presented, what is the expectation behind this, and more that I need to cover. What's your track record? And we could ask for like an Excel spreadsheet or stuff that tells us here's your experience or something else that's required on a document, or showing us that you have this. And then liquidity, like I mentioned earlier, how much cash do you have on hand? What's in the banks? Also getting into hard assets, or you can get a VOA for approval. That's another way to see what kind of liquidity you would probably have on hand in time. Think about it as kind of like accounts receivables, and you haven't been paid that, or you don't have that liquid, but it's not always necessarily that. It's just making sure you have what you have on hand, so that when it comes down to closing and your ongoing projects, you're able to fulfill on this, and you're not left with really nothing to show for at the end of this. So then you will need your entity docs, and I'll go over what that means. But very common, what you'll see within this is operating agreement, the formation of the business, IDs, stuff like that, cost of goods sold, things that will be asked for in all of this, and how prepared you will be to put all this material and supplies into your project and your build. And then you could have even added ID into that, but let's put ID as separate. Just photo identification, front and back usually, and making sure this is you or another form of ID. And if you're looking for a property submission, here's another one that, sorry. So property submissions can be a little bit different. So you'll need to submit a property application by the product. And that's what we're going to be looking at for by product. How do you submit this property in that application? And there are multiple properties that we need to account for multiple applications, or under one if possible. And then similar to a term sheet, you're going to need a property term sheet quote, though, not a line. So we can look at like what we give you in a line of credit, what can we give you in a full lump sum. There's quite a bit of that stuff there. If purchase, is it executed purchase contract? So if purchase is it an executed purchase contract? How is this set up? Do you have it already purchased with your submission that you'll add? And do we need to look at an executed purchase contract, an agreement? What's already in place? A renovation budget, which is huge, ongoing needs usually. And like I help out people in like restaurants, and they're always renovating. But we want to understand, what is the renovation budget for what you'll need currently? What could it be later? What are you trying to do? We also need plans and specs for rehabs, and that usually comes first and foremost, especially with a lot of other different real estate. And so usually greater than 250K for new construction is what we are looking for. So plus, and like I said, greater than for new construction is usually the emphasis for that. The other part of it is I wanted to mention is a contractor app. And after third parties required before thirds are usually for new construction stuff that we'll need, that need to be ordered. But that's just a little bit I want to mention there. If you have experience like this comes back to this, you fall underneath different tiers. So let me move this out of the screen and focus on the part that how you can qualify with better borrowing experience. So there are different tiers. You'll see like 1 through 5, 1 through 10 at times. Certain lenders have a different way of looking at approving you, but it's common that with the higher tier lenders, you'll see a lot of like, if you're in tier 1 and you're ineligible at that point, you've completed literally 0 builds. And it's likely not a horizontal build either. Tier 2, it could be redeemed or deemed as ineligible, and that's 1 to 4. So you don't have 4+ builds in that, like I went into earlier. Tier 3, 5 to 11 builds, you're in that space, great. Tier 4, 12 to 23. 12+, we're loving on you. Like if you have 12+, that right there, there's much more flexibility. Tier 5, 24+, and for experienced fix and flippers, 13+ flips in the last 3 years, you may be eligible. So not 4, not 5, not 7 multifamily, this and that. But if you're an experienced fix and flipper, 13 plus, sometimes it's 12. But in like the multifamily, not multifamily, but more rental space, it's different on what you can get in there from a beginner, but more scrutiny, especially if you don't have that experience in what you're trying to get from a specific lender. But with fix and flips, a lot of the times when you're trying to get into new construction builds, we have to account for what single family homes, what fix and flips, what you've cash flowed, how much assets do you have. It's like kind of like an SBA loan in a way where if you have all of this real estate asset or assets and you have a portfolio of fix and flips, you've been around for some time, how many builds, how many of them have been complete builds, fix and flip builds. There's so much I can cover for you on that side. There's so much, but experienced fix and flippers, 13 plus flips in the last 3 years, 36 months. Again, there's that number, may be eligible. So make sure you have that. And I think I've covered just about everything. Let me see. I have this other page that I wanted to show you and how that looks like on the submissions for specific stuff. Let me make sure I have it all. But things like on an application for onboarding, like driver's license, I'm going to be asking for the contractor/builder's license, proof of insurance, bonds to include workers' compensation as required by your state, contractor profile, which does include your general information, previous experience with supporting documents that are attached, like past permits, NMLS listings, etc. Your statements of your capabilities of what you're able to do. Your references is huge, like a resume, subcontractors, materials, clients, who's on this project, what's going to happen here and there. Are you going to lose people, subcontractors? You would need to complete this process only once. And then subsequently, we only perform an annual update of the licenses and insurance. And so there's a little bit about that there and what would be required. And I'll give you all the information for you to submit that and what would be asked for on the new construction property app, like your target closing date, what's your requested loan amount, how long do you anticipate it taking from loan to close to selling/refinancing the property, what's your lot purchase price amount, what's the current lot market value, that's something huge you might not have known of. 3, what's your total construction budget remaining after all of this is done, total verifiable construction already completed to the date on what you've done, how much have you accumulated, your portfolio, your estimated after repair value. Note that the cost unrelated to your construction or the property cannot be included in your budget. So anything unrelated, that's common and that's obvious. And that includes, in case you needed to know this, like interest reserves that are not there, that shouldn't be there. Any kind of fees, as I said earlier, that aren't unaccompanied by the carrying costs that cost to go over that are completely separate from what you're building, the realtor fees that are not included into that, they did their part, and closing costs, etc. So there's quite a bit of this that I would ask from you that needs to be then submitted so that I can have that, the property, borrower information, the entity name underneath what company type, business EIN, registered to do business in what states, what type of build are you building, are you doing a guarantor app, what guarantors are on this, your track record. I can give you a specific Excel spreadsheet where you will be able to then list all of this information so that I can see stuff like your street address, your city, state, the owner title, entity used for your transaction, the rehab or construction budget, the ground up new construction, is a yes or a no that you're doing that, build to rent, what are you doing, disposition price, sell price, if sold, value, if refinance, your date of disposition, rehab. There's a lot of other stuff. I know it's quite a bit and a handful to go through, but additional guarantor stuff that I'm going to look for. And then your budget, like what do you plan to budget for all of this in what I just showed you in, or what I just went over, but what's the construction budget submission? Like what are we looking for, the scope of work, the property address, the total square footage, the feet on that, the rooms, the units, the bedrooms, bathrooms, kitchens. Like we want the whole kitchen sink, not just the bathtub or a kitchen, the soft costs, gas service, meter set, is it water service, meter set, when will that be, temp power, temp toilet, engineering fees, architectural fees, a lot of other stuff that could be asked for, the survey drawings, and the total soft cost demolition, site work, flat work, is it not flat work, what are you doing foundationally? There's so much more, and I can share with you all this stuff, so I don't want to overwhelm you right now. If it already is, don't worry about it. I'll guide you in all of this, and then I can see the plans for a lot of this and what you plan to do. And I actually have one opened on my other screen here. I can't show you my one of my clients because this is confidential information. But what they have here in their purchase price or initial planning phase, earnest monies, the closing phase, what the amount will be there on the balance, and then the expected return on the land and all that they have. And it's a huge build that they're doing. I've seen things on golf land and a lot of other stuff that's out there. But now let me go into a little bit about this other form. Let me see if I can come back into, give me 1 second. And then we'll close up. I wanted to show you this earlier, but if you're trying to do a ground up construction, especially for the commercial space, I have the real estate questionnaire access and land questions you can check out. And if you click this link, you can go there. I might leave this for you down below, or I can show it to you later. But if you have land you'd like to purchase or refinance, max 50% LTV, then these questions would then need to be answered. You can please copy and paste these questions below into an email and have them answered, or just with the answers to each, like property address, property per type, if purchased, what is the purchase price and down payment available, and stuff like that. I'm not going to go through each one of them, but rate and term expectations, business profile for land, business website, number of owners in the business, company incorporated when, what service or product does your business provide, all the way down here to different revenue amounts. It can be 2022 revenue for the last year, 2023 year to date. So this stuff changes over time, and I have updates for all of this as well. And as we go into another year too. So what is the largest loan? So this should say like 2022 and 2023, but I'll leave it as is. And I change it for each person. That's different. And then what is the largest loan on credit / business / personal? What do you already have? What have you done? What loans do you currently have in outstanding, business and personal? Do you have any UCC filings on your business? What is the term and rates on them? What are your expectations on rates, APR and term, 1 to 5 years? Borrower's personal profile. This is then where you would add your estimated FICO credit score. If already pulled, please send your copy. Own or rent house, ever declared bankruptcy? Do you have a criminal record? Repossession / foreclosure? Do you have any collateral you can put down? This will drastically improve your rate, term, and loan amount. Borrower's net worth, what is that? Not including business valuation, only hard assets minus debts. So I'll leave this down below in the description. I also have one for the real estate side. I'm going to bring it up on a different screen here. Give me 1 second. So I have this real estate questionnaire form too. If you're doing any other kind of build, maybe it's a fix and flip. Maybe you have somebody else who can help you with that. And you have this here, property address, all the way down to just describing your financial needs. And you can put all the details there for fix and flips. How many properties have you done? Amount of liquid assets, LTV, ARV. What's your expectation there? So quite a bit to cover in one video. Let me see if I missed anything. I'm looking over some of the tabs I've already shared with you and see if there's anything else I can cover. But just know that on a ground up construction, for like a loan on that, they could go from 100 to 50 million, and the minimum land value we want is at 150K. So a lot of the stuff with commercial stuff that you're going to see, you'll want at least 75% to 85% LTC you'll want, and that's what will commonly be given. That's up to 100% of the rehab. So there's that as the bonus. Usually your credit needs to be above 680, sometimes 660, but good credit is better to get that LTC percentage between. And then you also have, as an experienced investor, that's what you are, or that's who you can have, the desirable market area, product market fit, or location. And if you don't have that, it's 55% to 75% LTC, which is up to 80% of the rehab. And then that meaning your credit is then below 680. It's not good. And then you have limited and no experience, or the opposite. And then it's a high risk market area instead of low risk. And on that part, you'll see 6 to 24 months commonly with interest only payments. And then the interest rate percentage depends on your market, depends on what you have with credit and more. But when you see 5 to 8%, that's normally credit above 680. 5 to 11% stretches out there. So you can see some differences, significant experience, and the market's always changing. So the rates could vary. And then 8 to 14% if your credit is below 680, limited experience. And then it factors in for a down payment on this stuff, especially if you go to the traditional route. And it's like, let's say it's a commercial property itself, you're already looking at 20 to 40% within that. Can we go lower? Well, what do we have to do? Is it feasible? There's a lot of other stuff to factor in. But prepayment penalty on like ground up constructions for commercial and stuff like that, none. Foreign nationals can be case to case. Time to close can take 3 to 6 weeks. And it's not uncommon to see that, especially when you're doing other kinds of builds. The documents for a lot of that is a 1003 real estate loan application. You want to have 3 months of bank statements applied, your investment history and experience, a schedule of real estate that you've owned, scope of work and use of your funds, plans and permits, which is bottom, foundation, purchase of agreement or a purchase agreement, as you should probably know about. That's if it's applicable to it. Usually that's what we would want. And then a recent credit report. That's really important. And I'll show you how to submit a lot of this, but that's what I wanted to cover in this video. Let me make sure I covered everything that you needed to. I'm looking at a 1003 form right now. I don't need to really go over all that, but uniform residential loan applications. What are you applying for? Individual credit, applying for joint credit. There's a lot of other stuff to go into, but that's for another time. And I'm looking over here to make sure I covered everything. I didn't miss that. Another thing too is if you have land acquisition and you need help with that, I can as well get in there and help you. And if it's a land acquisition when it's custom home building, and you need to look at the provisions and what kind of venture this is and the size of the loan amount per custom home that is built. There's so much that needs to be accounted for when it comes to understanding what your needs are as opposed to somebody else's and what kind of build it'll be. And so once I have a better understanding of what you'll need to build and how it's all plotted and what soft costs are added at this point with your utility, you probably have utility hookups and proposed lots. And if you have it for whatever you're doing, and maybe there's septic tanks and stuff that's already put in place or you need to put in place, and how you'll be using this for engineering fees. You have soil to account for where it'll be built on, the county maintenance, the environmental fees, and that's huge. That's the biggest part. And for the purposes of plating. And so there's quite a bit of it. I can go into this even in more depth, but I think that's what I wanted to end with. And I hope you got value from this video. And I'm here to help you whenever you need to. This isn't if you watch any of my future videos, again, this likely won't be the location because I'm at my younger brother's place looking over his corgi dog. Not the chair I normally sit on, not the one that I like, again, for my characteristics. I just like the more professional feeling ones, the ergonomic ones, the ones that give me more cushion at least. And I still use seat cushions, by the way. I put the back seat cushion and I attach it to the chairs, and I have one underneath me at my home. And I just like it for the feel, for the tailbone, for the back, my posture. And these don't really support you like that. And they can be helpful for the shoulders and stuff, and it also for me feels like it's too young and childish or like race car driven and stigma. It's not my thing though. So just so you know, you might see me in a different environment soon if you watch later videos. But down below in the description, go ahead and fill out the form for the new ground up construction. Look through the video. Also the forms, I'll leave more of that information down below for other stuff. If you can't go through the whole traditional way, then you can use revenue back, credit back funding to help you along the way. Hard money if you needed to, absolutely. That might be the last resort. Or it's something you're looking at right now to do hard money, and there's nothing wrong as long as you know how much you'll cash flow and you want to get something done quicker and it's proposed better for you and how you need to close and what you can't do anywhere else too. So hopefully you got value from this video. If you did, I'd appreciate it if you gave it a thumbs up. Feel free to share it with others. You don't have to though if you don't want. And if you haven't subscribed, I'd greatly appreciate you doing so. And please click that bell notification icon so you do not miss any future content I will be coming out with. That is all for now. Take care.